From the dawn of humanity, we've sought ways to trade, to build, to thrive. We moved beyond simple survival. These societies, no matter how different, share a common thread. That thread, woven into the very fabric of their existence, is the concept of currency. Currency isn't just coins or bills, it's how we exchange value, how we cooperate on a grand scale. Currency evolved, taking many forms throughout history. From shells and beads to gold and silver, each iteration aimed to solve the problems of earlier forms. But the essence remained the same. Currency represents value, a value we collectively agree upon. Paper money, for example, has no inherent value. Its worth comes from the trust we place in the system, in the government that issues it. This trust is the bedrock of any successful currency. It allows us to transcend the limitations of barter and participate in a global marketplace. Today we stand at the cusp of a new era, one where digital currencies like Bitcoin challenge our traditional notions of money and trust. Our journey begins at the dawn of civilization. Imagine a time before money, before coins, even before the wheel. Early humans living in small nomadic tribes relied on their immediate environment for survival. As these tribes grew and interacted, they discovered the benefits of sharing and exchanging resources. This realization marked the birth of the barter system, the earliest form of economic exchange. A hunter, laden with more meat than his family could consume, might trade a portion for tools or hides. A gatherer, skilled in finding medicinal herbs, might exchange them for protection or assistance. While revolutionary in its simplicity, the barter system was inherently limited. Finding a suitable trading partner often proved difficult and time-consuming. This double coincidence of wants created significant friction in the system. Furthermore, bartering lacked a standardized unit of value. How many baskets of fruit equated to a handcrafted spear? These valuations were subjective, leading to disagreements and inefficiencies. Moreover, many goods were perishable, limiting the window for trade. As human societies expanded, the limitations of the barter system became increasingly apparent. The rise of agriculture led to larger settlements and surplus production. Trade routes emerged, connecting distant communities. This burgeoning economic activity demanded a more sophisticated and standardized form of exchange. People needed a way to overcome the barriers of barter, a universal language of value. The answer lay in the discovery of precious metals and the birth of coinage. The use of precious metals like gold and silver as a medium of exchange marked a turning point in human history. Unlike perishable goods, these metals held intrinsic value. Early forms of currency involved weighing and assessing the purity of these metals during each transaction. This process, while more efficient than barter, still presented challenges. The need for a more practical system led to the invention of coinage. The first coins, simple pieces of metal stamped with a seal of authority, emerged around the 7th century BC in Lydia. The adoption of coinage spread rapidly, facilitating trade and fueling the growth of empires. The Roman Empire in particular recognized the power of a unified currency. Roman coins, standardized in weight and design, circulated throughout their vast territories, promoting economic stability and integration. These coins served not only as a medium of exchange but also as a powerful tool of propaganda. A Roman coin, whether in Rome or a distant province, held the same value, fostering trust and facilitating commerce. This economic integration fueled the growth of cities and supported vast armies. The legacy of coinage extends far beyond the fall of the Roman Empire. For centuries, coins remained the dominant form of currency, adapting and evolving to meet the needs of different societies. Even today, in our increasingly digital world, coins remain an integral part of our financial systems. It's a tangible reminder of the enduring legacy of this revolutionary invention. As trade routes stretched further, the physical limitations of coins became increasingly apparent. Transporting large sums of gold or silver over long distances was cumbersome and risky. The inherent dangers of moving wealth fueled the need for a more practical solution. Enter the concept of representative money, where something tangible represents a specific quantity of precious metals held elsewhere. These early forms of IOUs served as a trusted intermediary in transactions. A merchant could deposit his wealth with a trusted banker and receive promissory notes, essentially paper promises redeemable for the deposited amount. The true revolution arrived with the emergence of true paper money in the 11th century China during the Song dynasty. Faced with a copper shortage for minting coins, the government introduced paper banknotes backed by their reserves. These early banknotes represented a paradigm shift. For the first time, a government-issued piece of paper, carrying a promise of value, functioned as the primary medium of exchange. This innovation spread rapidly along the Silk Road, carried by merchants who recognized the convenience and security it offered. A merchant could now finance a journey to distant lands with lightweight, easily transportable banknotes. The widespread adoption of paper money led to the establishment of central banks, institutions entrusted with the power to issue and regulate national currencies. These banks played a crucial role in standardizing banknotes, ensuring their value, and managing the money supply. The rise of national currencies marked a significant departure from the gold and silver standards that had prevailed for centuries. This shift laid the foundation for the complex and interconnected global financial system we know today. While paper money revolutionized commerce, it also introduced new challenges. The decoupling of currency from a physical commodity made it susceptible to inflation. History is replete with examples of hyperinflation, where the uncontrolled printing of paper money led to economic collapse and social unrest. The latter half of the 20th century witnessed an unprecedented technological revolution, the rise of computers and the internet. This digital wave transformed every facet of our lives, including the concept of money. The first tremors of this shift were felt with the introduction of credit cards in the 1950s. These early credit cards planted the seeds for a future where physical currency was no longer a necessity for transactions. This marked the first step towards a world where money, in its digital form, transcended physical limitations. The true potential of digital money unfolded with the advent of the internet in the 1990s. E-commerce platforms emerged, connecting buyers and sellers across the globe. Online banking services allowed individuals to manage their finances, transfer funds, and pay bills with unprecedented ease and speed. This digital revolution democratized finance, empowering individuals and small businesses in ways previously unimaginable. With a few clicks, they could access credit, make investments, and participate in the global economy. The internet had become the backbone of a rapidly evolving financial system. Today, we stand at the cusp of a cashless society. Contactless payments, mobile wallets, and peer-to-peer transfer apps are rapidly becoming the norm. Imagine a world without the need for physical wallets, where a simple tap of your smartphone completes a transaction. This is the future that digital money promises, a future where convenience and efficiency reign supreme. This transition, however, is not without its challenges, including concerns about data security and the digital divide. The story of money is a testament to human ingenuity, a continuous quest for more efficient and accessible forms of exchange. From the barter system's humble beginnings to the digital revolution's transformative power, each stage has built upon the lessons of the past. As technology continues to advance, one can only wonder what the future holds for the very concept of money. The story of money is far from over, shaped by our evolving needs and boundless capacity for innovation. As we venture deeper into the digital age, a new player emerges on the stage of currency, cryptocurrency. Born from the fusion of cryptography and digital technology, cryptocurrency presents a radical departure from traditional notions of money. Imagine a currency not controlled by governments or financial institutions, but rather by a decentralized network of computers. This is the essence of cryptocurrency, a revolutionary concept poised to reshape our financial systems. Unlike traditional currencies, cryptocurrencies exist solely in the digital realm. Transactions occur directly between parties, bypassing the need for intermediaries like banks. In 2008, a mysterious figure or group of individuals, operating under the pseudonym Satoshi Nakamoto, introduced the world to Bitcoin, the first and most well-known cryptocurrency. Bitcoin, a digital token operating on a revolutionary technology called blockchain, ignited a firestorm of interest and debate. Here was a currency free from government control, censorship-resistant, and accessible to anyone with an internet connection. Bitcoin's emergence coincided with a period of deep mistrust in financial institutions following the 2008 global financial crisis. At the heart of Bitcoin, and indeed most cryptocurrencies, lies blockchain technology, a revolutionary system for recording and verifying transactions. Imagine a digital ledger distributed across a vast network of computers, where each transaction is recorded in a block and added to the chain in a chronological and immutable manner. This distributed nature ensures transparency, as every participant in the network has access to the transaction history. Blockchain technology employs sophisticated cryptographic techniques to secure transactions and prevent fraud. The emergence of cryptocurrency represents a profound moment in the evolution of money. It challenges our traditional notions of currency, decentralizes financial power, and introduces new possibilities for global commerce and financial inclusion. However, the cryptocurrency landscape remains volatile and uncertain. Regulatory hurdles, security concerns, and the potential for market manipulation cast a long shadow over its future. Will cryptocurrency revolutionize our financial systems or fade into obscurity? Will it empower individuals or become another tool for speculation and inequality? Only time will tell. One thing is certain, the conversation surrounding cryptocurrency, blockchain technology, and the future of money has just begun. As we navigate this uncharted territory, one thing is certain: the evolution of currency continues, driven by our relentless pursuit of a more efficient, accessible, and equitable financial system. We've journeyed from the barter system's humble beginnings to the digital age's complex financial instruments. Each step in this evolution, driven by the need for greater efficiency, accessibility, and security, has reshaped the way we interact, trade, and build our societies. The story of money isn't merely about coins, banknotes, or even lines of code. It's about human ingenuity, our constant endeavor to overcome limitations, to connect with one another across geographical boundaries and cultural differences. From a single grain of wheat offered in barter to the potential of instantaneous global transactions via cryptocurrency, the essence of exchange remains constant. We seek value in what we produce, in the services we offer, and in the intricate web of commerce that binds us together. Understanding the historical trajectory of currency, from its rudimentary forms to its increasingly abstract digital representations, allows us to appreciate the forces that continue to shape its evolution. Today we stand at a crossroads, grappling with the implications of cryptocurrencies like Bitcoin. Decentralized, operating outside the traditional bounds of government-issued currencies, they challenge our very understanding of what money is and how it should function. The allure is undeniable: a system promising greater transparency, security, and control over our financial lives. Yet, questions abound. Volatility, regulatory uncertainty, and the potential for misuse in illicit activities temper the enthusiasm surrounding cryptocurrencies. Will they usher in a new era of financial freedom and inclusion, or will they exacerbate existing inequalities, leaving those without access to technology behind? The answers are complex, nuanced, and likely to unfold over the coming decades. As we peer into the future, one thing remains clear: the evolution of currency is an ongoing process. Technology will continue to disrupt, offering new possibilities, presenting new challenges. Whether it's the development of central bank digital currencies backed by governments, the integration of biometrics for secure transactions, or the rise of entirely new forms of value exchange we can scarcely imagine today, the landscape of money will continue to shift and adapt. The responsibility lies with us, as informed citizens of an increasingly interconnected world, to engage in this evolution. Understanding the history of money, from its earliest forms to its digital frontiers, empowers us to ask critical questions, to demand transparency, and to shape a future where financial systems serve the needs of all, not just a select few. The story of money is ultimately a story about us, our ingenuity, our values, and our shared aspirations for a more equitable and prosperous future.